The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day from TFNN. Welcome to the May 4th, live from New York, fantastic Friday edition of the Trader's Edge Show. I'm Rhodes TV, Perseverance Rhodes, who absolutely knows that Egypt should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one, and of course, an extraordinary weekend. And the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 8 a.m. out here. That's right. If you're listening to the 1 o'clock show, right now this is being hosted, recorded at 8 o'clock in the morning. Either way, I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So if you're listening in at this early hour, feel free to go ahead and give me a call at 877-927-6648. If you can't call in, you can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow futures trading down 61 points. They're trading out at 23,849. You've got the Russell 2000. That's trading down 4 points. She's trading at 1546. The NQs are down 23 points, 6641. The ES-Mini is off 7 points. We've got gold is off a buck. Silver is flat. Light sweet crude is up 26 pennies. Trading out at 68.69. The first question that came in this morning, let's see if I can get that here. Basically, the question was, you know, is the S&P 500, what's my guess? Has it made, is it making a bottom here? And is it getting ready to launch higher? So let's first open up the S&P 500 chart. Now, unlike the normal show where I'm able to post all my charts live, oh, this is a real bummer. Okay. Let me see how to do this here. Oh, that's not going to work. That's not going to work. Let me try this. So this is going to take this is going to be a little bit more cumbersome than normal. Now I remember what the deal is here. So give me just a second. I'm going to have to post each chart individually, and it won't be like the first one, but should be, hopefully this post's okay. I want to just check this out. Oh, Lord. Yeah, this is much more cumbersome. My apologies for that. There's just nothing that I can do here. Just give me a second here just to check to make sure that yeah, okay, that's good. So we've got at least a daily chart here for the S&P 500. And if I were going to make my call with regard to has the S&P formed a bottom just yet, you know, what I'm going to do, I'm going to post another chart here. Oh, this one's not going to show it either. The answer, my friend, is blowing in the wind. If I take a look at the S&P 500 chart, I do not have a clear signal that this has formed a bottom. You'll see that price is trading below Stevie's red line. Stevie's red line for the S&P 500 is 2644. Yesterday's candle session, not a bullish, more of a confusing. I suppose that's probably so that's the coolest thing here. We take a look at yesterday's candle session. You'll see it looks like a doji, smells like a doji, but it's not a doji. It's called a high wave candle. And high wave candle, actually, the Japanese interpretation of that from a candlestick standpoint is confusion. So you're asking the question, has the S&P 500, is it forming a bottom? Based upon the low from back in February, then the low in April, yesterday being a higher low at this stage here. But I will tell you that it's confused. Now, if we just simply use Stevie's red line, the meaning here inside the S&P 500 is we still have a falling price oscillator below zero. The chart that I posted doesn't show the price oscillator, so you just have to believe me on that. And when you have a falling price oscillator below zero, it doesn't get more bearish than that. The only time when that statement is not true is when we have a clear bottoming signal. And yesterday's high wave candle is not a clear bottoming signal out there. We can also see that in the S&P 500, it has closed back into its April swing point. And when you close inside of the swing point, yesterday we know it was with light volume, you can always go test the bottom of that swing point. So inside the S&P 500, if you're to ask me that question, has it formed a bottom? Is the S&P getting ready to launch from here? The answer is I don't see that. I don't see that just yet. And instead what we would have to do, especially on like a jobs Friday, we got the futures market trading. You know, are there any clear signals out here for the S&P? And we go to take a look at the ES Mini. So let me go ahead. Let me just take, again, it takes me just a few minutes here to be able to get this chart sized up at least enough so that I can go ahead and post it inside the Tigers, well, and then again on TigerTV. So here's the chart of the ES Mini. And this question here that was asked this morning was of our man Z inside the Tigers Den. And Z also knows, as you do, that these markets like to sing in the key of G. These are Stevie Wonder charts out here. And we take a look at part of the Chapman wave. We take a look at a swing point high or low. In this case here, we're looking at a 5-hour chart. What we'll see is if we start at the actual high, that, by the way, looks like it came in at the time frame of 9 o'clock. This is 9 o'clock on the 18th. Let me see here. Is this 18th, 17th, 18th of April? I can't see what it is, but give me a second. I maybe just got to learn how to rework this mouse here. It was the 18th. So if you start your wave count from the 9 o'clock session on the 18th, you will see that yesterday, as the market was pushing lower, got down to that 7th wave move. That's letter G on my chart out here. And as it was doing that, we also had price pushing lower, doing it with less relative energy. Now, the 5-hour time frame charts are really good time frames. If the daily's not giving you a signal, it's nice to go to that 5-hour chart just to take a quick peek and see what's going on here. So at this stage, what the 5-hour chart is telling both Z and myself, and now you, that the S&P, the ES Mini, is trying to form a bottom. But what you'll notice, most important on this chart, is that even yesterday, as it formed that bullish candle, that little piercing candle, even though it had follow-through on that next session out here, what you're going to see is that it found resistance at Stevie's red line. Currently, that's priced at 26.28. Now, that number is going to change, as the morning goes on. But as the jobs report number comes out in about 16 minutes or so, what we'll watch for here, we'll watch to see if the ES Mini trades above that level. Because if it does trade above that level as we go into the 9 o'clock hour, that's when this next candle will complete. Then that says, okay, you've at least got a bounce coming, and maybe a decent one when you have these two patterns. Right now, there's no confirmation that the ES Mini is going to trade higher after the jobs data comes out. But we'll take things one step at a time. I'll be here to hold your hand. This is Steve Rhodes with TFNN. Be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to options expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So just a reminder for those of you listening in to the normal broadcast at the 1 o'clock hour of this show. This is being broadcast right now. It's about 8:18 in the morning. We've got the Dow futures down about 94 points right now. NASDAQ futures off 34. S&P down 11. Gold still down about a couple of bucks. So what the markets are preparing for, I suppose, is the Jobs Friday data. So between the 8:30, 9 o'clock time frame, you and I will be analyzing that information. What you and I like to do, we like to do this certainly between the 1 and 2 o'clock hour, is look for different tells in the market. Is the market providing us with any information at all on different time frames? So what you and I just did and take a look at the ES Mini, we were looking at the 5-hour chart, showed us a potential bottoming pattern, featured this inside the newsletter this morning, and it's only a potential pattern out here. It's got a couple of great signals, but the signal that's missing is the mere fact that price is trading below Stevie's red line. I'm going to change this chart here to a 30-minute time frame. You won't see it just yet. I'm just going to change here. I'm going to go ahead and expand this out just a tad. And, what I'm looking for here as well are signals. Just simply, what we did a couple of days ago before the Apple earnings came out. I don't recall if that was Tuesday or what have you, whichever day it was. You and I took a look. Well, first let me go ahead and post this chart, but I'll speak about the Apple chart as well. And we looked at the Apple chart, and before the earnings were released, the chart had told us that price wanted to trade higher because it had completed a Gartley buy pattern. So for those of you that are Gartley aficionados, it gave us the confirming signal, no different what you and I are doing this morning and taking a look at some of these different charts out here, intraday charts, in this case, a 30-minute time frame chart for the ES Mini. Now, on a 30-minute basis, one of the things that you can notice is at the bottom panel on my screen, that's that price oscillator. And you'll see that it's just simply been hovering around the zero line out here. And right now, the Stevie's red line is priced at about 26.26. The mere fact that it's trading below that suggests that what we're going to see is we're going to see at least futures trade a bit lower on that news, on the jobs data. Is this something I would want to take a trade on? Absolutely, positively not. We're too close to the zero line, so it could go either way. Right now, this is telling us that sellers are the ones in control. But you can see this wide-ranging bar, if you look at the chart, actually came in at 1 o'clock in the afternoon. Now, we don't have volumes on this chart here that I'm using. We don't need volumes because candlesticks will provide you with a ton of information, especially the wide-ranging bar. So if I were to give you a price point of where price would pull back to, you'd have to say it'd be back to that breakout area, which would either be the bottom of that bar in the 2601-ish area, or really all the way back to yesterday's lows out here. So if that were to occur, as we speak right now, just looking at that 30-minute chart, none of us should be surprised. 5-hour chart, that has a bottoming signal, but price has got to close above. At 9 o'clock, price has to close above that Stevie red line area. If I take a look at let's see what the other equity futures contracts are doing on a short-term basis. So I'm going to switch over and take this chart. I'm just going to do it like this. I'm going to go, give me a second here to fire up the NQ chart so we can see what it is doing. So I'll go ahead and post this as soon as this populates, and we'll take a look at it on a 30-minute time frame as well, just again to see if there's any kind of tells here. So here's the 30-minute time frame chart for the NQ. Now what you'll notice here, it's just a slight nuance. The difference between the NQ right now on a 30-minute basis and the ES. So the NQ's price oscillator, and that's the difference between two exponential moving averages, 19 and 39. This happens to be trading above the top of its, it is trading above the zero line of that price oscillator. So what the NQ is telling us is that what we're seeing right now in the move lower in price is nothing more than a normal retracement. So just like when we looked at the S&P 500 generated that high wave candle yesterday, which is nothing more than a candle of confusion, the markets are very confused right now as to which way to go. This has been a market that has had something for the bulls and something for the bears nearly every single day. Now, I don't think that necessarily, there's nothing here to suggest that that is going to change. Let me take a look at, let me just give me a moment here to minimize this chart, which is more than just a click of a button because of the way I have to do that here on this laptop. One of the benefits of traveling these days. I'm going to put up the NQ chart, if I can. Here's the daily time frame chart for the NQ. So to the extent that you believe that it is the NQ that is the one that's going to generate the signal for us, in the belief that it's one of the weaker, or that it can at least pull the markets higher and lower. The interesting thing about yesterday's candle session was that it was a hammer. A hammer candle was also a test of a swing point from just a few trading sessions ago. And a hammer candle, and here's the beauty, really, I suppose, of yesterday's candle session. A hammer tells us that the market is trying to hammer out a bottom. That's really the Japanese interpretation of it. And in fact, that's what you typically will see take place, which is why you and I have that expression. If you close below the low of a hammer, if you're long, you're wrong. Now, what we know is what that really means is you have to go find the next level of support, right? It doesn't mean, okay, if you're long, you're wrong, and you're wrong forever. No, that's not what it means. What it means is you head down to the next level of support, which happens to be the same candle session, which is April 25th that was tested yesterday. Now, if you and I were to go take a look at the QQQ series ETF out there, to use that as our volume gauge, what we will see is that the Qs tested the April 25th swing point with light volume. And you know what Tom likes to say? Because you and I said, we owe him a royalty every time we say it. If you can't bust him down, you're going to go bust him up. Now, what does bust him up actually mean inside the NQ? If that's how it behaves today, bust him up says you go up in towards that April 19th level. So we, inside the NQs, inside the market basically, the range that we're trading in, inside the NQs, it's the high of April the 19th, yeah, or the day earlier, it's about, I'll just give you the range, about 66.81, and I would say to really yesterday's low, about 65.36 out here. So we posted that chart. You can see, if I posted the chart of the Dow equity futures contract, why don't I do that for you? You want to see a market that's really trying to hammer out a bottom? Forget about the NQs out here. Let's go take a look at this daily chart in a moment here to try to expand this out as well. We'll take a look at the YM, the Dow equity futures contract. Now, look, folks, you don't have to trade the futures contracts. But if you're really looking for price discovery and to try to understand what's going on, go get access to this data. It's going to provide you with so much better information than going ahead and taking a look at those ETFs, the Dow Diamonds. It's going to give you so much better information than just looking at the indice out here, because you're looking for price discovery if you're a pattern recognition trader. In the case of the Dow Equity Futures contract, you will see that yesterday was a hammer candle. You will see that a couple days before that was a hammer candle. Let me give you the exact date out here. That way we're not, April the 25th. We'll see that on the trading session here of April the 4th, it was a hammer candle. So even as bad as the Dow looks, this is full of buyers lined up in this 23,200-ish area, 250-ish. I mean, the bulls, if you want to understand where the bulls are lined up, it is there. So the reality is, if this market's going to be the old sell in May and really get moving to the downside, it has to take out the lows.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the jobs report should be released. By the way, if you're listening on the show at the normal hour, I am coming to you live at 8:30 in the morning. So thanks for tuning in and listening. And what we're doing here during this next half hour is we're going to be able to try to interpret what the markets are communicating to you and I. So we're looking to get some type of gauge as to how the markets will trade during the day, let alone trying to find some type of trend out here. So although I don't have what that jobs data is at the moment, as we speak, and I believe it's just been released within the past 50 seconds or so. Initially, what we're seeing here is the futures trade up just a bit. Now, when I say trade up a bit, the Dow was down 90 points. Now it's off 50 points. So what we really need is more than just 50 seconds worth of data to figure out how the market is going to respond. I see that gold has ticked up, and it's really going to be, and we'll take a look at gold. Now, I'll give you the price point that gold needs to trade above, at least I believe coming into the 9 o'clock time frame, to give us some type of signal for legs. So I'm seeing the futures diminish some of those losses that it had. We'll come back to that. Let's go take a look at gold here next. Let me find the, see if I can find the gold chart. Well, I'll tell you what. Here, I'm going to start with the long term because it's really better to have an idea what the long-term picture is telling us. And for those of you that have been long-time listeners, you know that I've made the call. It's not really me that has made the call. What we've done is I've identified the pattern that back in 2002 that gold generated that went ahead and took it to its all-time highs. Took a long time to do that, by the way, so it's not like it's an overnight thing out here. That same pattern, by the way, and I'm showing you the continuous contract for gold. It's a monthly chart that we're looking at. And back in December of last year, gold gave us that exact same signal. Now, in order for that signal to continue out here, and here if you're looking at us, the December bar, by the way, happens to have a blue number 7 above it. And if you're taking a look at the chart that I just posted, what you're going to notice at the bottom panel of that screen is the price oscillator. Just like you and I have taken a look at for some intraday time periods, works the same on any time frame. And what took place in December was we saw a test of Stevie's red line as that price oscillator was at 0, and that gave us the bullish signal. If you take a look what gold has actually done this month in its pullback, a couple days ago as it was pulling back, what we saw here was nothing more thus far. Now, we're early in the month, right? We're early in May. But so far in May, all that price did was came back and tested Stevie's red line, which right now on a monthly basis, that's priced at $12.9970. Now what I'm going to do here, I'll just stick with the continuous contract because that'll make it a little bit easier for me for this thing to update. But what I'm going to do is I'm going to go ahead and I'm going to put in the 5-hour chart. So I'm going to give me a second here to do this, and I'll post the 5-hour chart. And from this 5-hour chart, well, I said that I would give you the figure. That's not going to work. Oh, that's a bummer. Give me a second here to see if I can reload all this data. Oh, wow. Okay. So I can't do what I was going to say. I've got to go to game plan B. Stevie always has a game plan B out here. So give me a second to try to figure out game plan B for this. And what we're going to do is we're going to take a look at the PAS profiles for gold. And, okay, so I'm going to post how to do this again. Okay, give me a second here. Well, when I say I have a game plan, there we go. Okay. Just got to get this. Sorry, folks, because I'm just navigating these charts, and they're quite a bit different than the way that I normally do things. So here I'm posting the market profiles. Oh, this is for palladium. Jeez Louise. Okay, so you got gold trading out at 13.14. Give me a moment for this here to post. You'll see the spike in gold, but it's not that spike in gold that we're really paying attention to. So now I'm going to post. And for those of you that wanted palladium, well, you got the charts for palladium. Here's the chart for gold. And you'll see in the very left-hand panel, you'll see just a 30-minute chart. You'll see gold trading at 13.15. What I want you to really focus on is the 5-hour chart, which is the next panel. So if you're looking at what I just posted, it's going to be the chart pattern that is third from the right. That's the 5-hour time frame. What you should notice on the chart is the top of that box, 13, 16, 10, which we have spiked, but we haven't closed over. Here's the deal. If we close over this at 9 o'clock, specifically at 9 o'clock, so another 25 minutes, what we will have is another level of resistance that has failed on a 5-hour chart. The reason that I'm looking at a 5-hour chart and I was trying to post that to show you was just like you and I looked at the ES Mini 5-hour time frame chart that had generated that beautiful bottoming signal out here, really two signals. They hadn't been confirmed yet, but they had generated the potential for that bottom. The same thing took place in gold yesterday on the 5-hour chart. And you'll see, if you're looking at that 5-hour chart, you will see that there is a brand new profile that formed. Now, that profile formed above the prior profile, so that alone says there is a change in trend on the 5-hour time frame chart. Also, this profile, the new profile that formed, is a bullish structured profile. What we mean there is the center line of the box, which priced at 1309, is closer to the bottom of 1306. So this tells us that buyers had the power to at least explore the entire box, and specifically to the upside, which it's done. This is the first test of the top of that box at 1316.10. Now, what happens if it doesn't close over at 9 o'clock? Nothing. It's a 5-hour time frame chart, and you get the same message if it doesn't close above it at 2 p.m., right? 9 plus 5 hours, you get 2 p.m. out here. But closing above that 1316 level is important. Just like on the daily time frame, may be hard for you to view, but the number there is 1315.40. We're at 1315 as we speak right now. If at the end of the day, you know, I hate to say the end of the day, because I don't like when the day ends. And it's a phrase that's just overused. But here, we've got to use it. Because if gold closes back above 1315.10, yeah, and we're 1315.50 right now, gold will have gotten back inside its daily TAS market profile, which, by the way, over the course of the last 2-4 days out here, we have not seen. And if that takes place, what you should then anticipate is that gold would make a run to the 1324 level. That's the center of the daily box. If it can get above that, 1334 would be the number. And what happens if gold doesn't close above 1315.40 today? You know, folks, if it doesn't close above that, as long as gold doesn't close below 1306.10, it still has a fighting chance to continue to motor higher. So that's what's going on there. Let's go take a peek in now that we are about, 8 minutes into the session here. Tell you what we're going to do. We're going to go to a hard break here in about 15 seconds, and then we'll go back and we'll take a look at those intraday time frame charts, see what kind of message they might be generating for us. If you do have a question, you can always send me an email, steve@tfnn.com. Again, this show being broadcast at right now 8:38 in the morning. For those of you listening at the normal hour, thanks so much for doing that. I'll be back to normal programming on Monday morning. This is Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Coming to you live from New York City. Looking out at beautiful Central Park. A little bit overcast as we speak right now, but a super hot, sweltering day yesterday. Right now it's about 8:42 in the morning if you're listening to the normal show. This obviously is an archive of this morning. And what we had was the jobs numbers that were released. I don't even know what the jobs numbers were. It's unimportant to me. It's more about being able to take a look at what's the market doing? What's the behavior right now of buyers and sellers? As we speak, we've got the Dow down about 111 points, only about 20 points or so lower than when the jobs numbers came out. We've got the S&P E-mini futures down about 12. NASDAQ futures off 36. Gold is up $2 at 1340. We don't really have any clear and convincing information as to what the markets want to do. Now, on a short-term basis, yes, we do. If we take a look at, let's come back to the, take a look at the NQ chart out here. Give me a moment to size this up. And it's a 30-minute time frame that you and I are going to look at that we'll post. I believe we posted an NQ 30-minute chart a little while ago. So here's a new NQ 30-minute chart. What we have here, and it's really important for me to watch not just the session from 8:30 to 9, which is what we're in right now, but then also the 9 to 9:30 session out here. Thus far, if you look at that very bottom right-hand panel, you're going to see the price oscillator reading. That's the difference between two exponential moving averages, 19 and 39 out here. And when that level, the difference between those two, gets to the zero line, and it's basically at about the zero line, what you can anticipate is that price and Stevie's red line, that's the red line that's inside that chart. It's also referred to as the oscillator unchanged line. That's where the bottom line in that price oscillator, when price hits that, that means that that price oscillator is going completely even, horizontal, as we like to say. And what you're looking for is a test of that level, a test and rejection, which is what we've had to the downside, says that price will go ahead and continue to trade lower. Now, what I'd like to be able to find for you is some type of pattern that I could actually post up on the screen out here. I don't have a pattern. When you take a look at that 30-minute chart here for the NQ, it's basically gone sideways. There's no real clear A to B equals CD pattern, so to speak. So the only thing that you and I can rely upon is what's that price oscillator and what's Stevie's red line telling us. As long as price trades below Stevie's red line, right now 66.48, then what you would anticipate is higher price. What happens if price closes over 66.48? Then that will have been a bullish test. So as we come into 9 a.m., if price trades above Stevie's red line, 66.48, what the NQ is telling you on a short-term basis is that it wants to go ahead and trade higher. Now, it's got some resistance not that much further up. So in order to really say that it wants to trade higher, In that case, we probably could find an A to B equals CD to the upside. It would need to close above about the 66.73 level out here, and that's what's going on inside of the NQ. What other piece of information can we take away from what the markets are doing right now? What else should we take a look at? Yeah, and I'm posing that question to you specifically, whoever you think it is that I'm talking to. Well, come on, you already know the answer to this. You're saying, Steve-O, what's the spot volatility index doing as we speak right now? And you know what? That is a great question. So let's go take a look at it. Let me expand the chart. Assuming this is, well, let me expand the chart a little bit more this way. Let me do it this way. Just trying to prep this. We're actually going to take a look at the spot volatility index itself. And that's going to be at your bottom panel of the screen. Now look at how that spot now, if the candle session were to close right now, certainly if the doji very close to also being a hammer candle, but like we got a lot of trading left. But you can see that there was a big spike lower in that spot volatility index. Here's the number, folks, that I want you to really focus on and pay attention to. And that is the 50-day exponential moving average. And that's price right now at $17.68. Now look, that number is also going to change throughout the day. So give it a few pennies. I was asked when we began the show, is the S&P trying to form a bottom because it has higher lows? And is it going to be ready to explode to the upside? If, with the exception of the one-day rate of change being greater than 10%. Now, I can't sit here and calculate a close above 1769, whether that would qualify. If we were to see a close, and if we did, folks, what that means is you would anticipate Sunday, Monday morning, you see some type of bounce inside the ES Mini. But here's what really needs to happen in order for the markets to move to the downside, the S&P specifically. You need to see continued closes above the 50-day exponential moving average. We really have conflicted markets out here. These are really day trading markets. Now, look, I'm not suggesting that you make any changes to your long-term portfolio right now, especially when all we can really say is that we're just inside a consolidation. But this consolidation would come to an end, especially since we are in the unfavorable seasonal cycle. If we begin to see the 50-day exponential moving average for the spot volatility index to act as support versus resistance. Even though we've had a lot of action to the upside, to the downside, the bears had to be licking their chops yesterday at about 3 o'clock. But if they weren't paying attention, or 2:30, whenever the market was hitting its lows out there, but if they blinked and they were not paying attention, they did, depending on when they got in on that short side of that trade, they just simply could have gotten run over. So you've really got to pay attention. But what I want to give to each of you is maybe a little bit better tool to guide you as to what the markets are doing out here. And this would be more from the intermediate term swing type trading standpoint, is that there's no signal here from the spot volatility index, which gives you a great signal. Actually, the signal right now is more consolidation or a move higher inside the S&P. As long as it trades below the 50-day, you close above the 50-day, then it's a whole different story. And then, quite frankly, it is game on for the bears, but not until you see price close over that. So use that level, something for you to pay attention to when it comes to the end of today's trading session. Hey, let's go take a look at bonds. Let's go see what's going on in James Bond land out here. Oh, I saw a really cool James Bond poster last weekend. Huge poster, pretty cool. And for those of you that are James Bond fans. But for those of you that are T-Bond fans out here, right now you've got treasuries, 30-year treasury, trading above Stevie's red line. Price oscillator is below zero, but this has more counter-trend rally to occur. And probably more counter-trend rally to occur for the next couple of days. Today's candle session, as we speak right now, looks like this could be a Tommy DeMark 6 out of 9 count out of his setup out there. And price here, this is the daily chart that we're looking at. Here's the level to really be paying attention. Let's see if this works. I'm going to change this to the weekly time frame chart. Right now, short-term bullish with more counter-trend rally to come inside T-bonds. But you would take a look at, hey, it's more than just that. This is the weekly time frame chart out here. And if price, we'll just call it 143.5. If price were to close above 143, look where price is. Oh, I didn't post it, did I? let me post this chart. It's going to be easier for you to understand what I'm saying as I post this chart. I want you to take a look at where 30-year Treasury is trading into right now. It's trading into resistance. This is a weekly time frame chart, but it's a weekly chart. Closing over red line today. Folks, anticipate lower yields and higher price in 30 years. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Folks, again, listening on the 1 o'clock hour. This is Steve Rhodes. Even though I may sound like I'm on a tin can, coming to you live from New York. It's now about 10 minutes to 9, and thanks for listening either live or to the archive. Looks like we have survived another show, even though coming from a hotel room and being with my hands tied behind my back. Right now, as we speak, you've got the Dow futures trading off 91 points, 23,818 is what they're trading at. S&P futures are down 10. NASDAQ futures off 31. You've got gold up $1.60. So no real change of movement here. Slight changes of movement from when we opened the show at about 8 o'clock out here. The last couple of thoughts that I can leave you with is let's go back to gold here for a moment. And I'm going to apologize to newsletter subscribers maybe because some of the information here that I'm sharing with you is what was included in this morning's newsletter report. I typically don't do that, but just in any event, let's take a look at gold here, priced in both dollars as well as gold priced in euros. And so if we're looking for some positives here on a closing basis, because these are line charts out here, what you're going to notice is that gold priced in U.S. dollars have been trading inside the consolidation. The low basically of this week, and then, by the way, that price point is right around the 1306 level from a closing basis. The resistance area inside of gold on a closing basis around the 1361 area. Now, what's really important to watch, and look, subscribers and I took a long trade inside the mining sector yesterday. We did that based upon the signals that we got on the 5-hour time frame chart. And if you're interested in learning those signals, just come on over, subscribe to Mastering Probability. That's my newsletter service. You'll also get the workshops that are associated with identifying those patterns. Would love to be able to teach you how to do that. What we're watching for, what we're looking for, is to see if we get gold priced in dollars to close above the 1107 area. So I like that the bottom of the consolidation held inside of gold. By the way, if gold is going to take off to the upside, who's going to outperform? The miners or the metals? The answer is the miners. Folks, thanks so much for being here. Stay tuned. David White following at the 1 o'clock show, but Larry Pesavento, he'll be up next. Have a great Friday, a great weekend. I'll be back with you at 1 o'clock on Monday. Take care, folks. Thanks for being here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.